I have been making mistakes left and right these days. I'm gonna make a couple corrections in my later on, but today we're gonna talk about a whole bunch of different things. I'm gonna give you a little bit of an update on Collab and some of the stuff going on with my portfolio there. Portfolio, I've got one property, but I've got some info on some of their others. Um, Talk a little bit about Real Bricks. It's a platform that's come up before. A little bit of an update on the doggy daycare dog park property. Found out some new information on that. A lot of it helpful, answering to some questions. But also, I just had some stuff wrong, so I just want to share what that is. Um, it's a good indication that you should be doing your own due diligence because I try to let you know that haven't always dug into these properties 100% by the time I'm doing a video. Especially that one, I had taken the weekend off and was just trying to catch up and wanted to put something out about it. But yeah, got something wrong. Want to share that with you today. I always want to correct stuff if I'm wrong. So if you're a co-owner and you're watching these, or a platform owner, and you think I'm saying something that's not right, please let me know. And then I'm going to end talking a little bit about Jerry's tweet on X today. If you don't know who Jerry is, he's the founder of Lofty. I think he put out a little bit of a funny thought. Um, I wanted to share that, and it'll probably turn into a little bit of a rant because it rubbed me the wrong way. I know he didn't mean it the way that I took it, I don't think, but I will get into that though. Oh, by the way, Joe Catchpalia, always sitting on the couch, making some money, investing in fractional real estate online. Yeah, so Collab, I own one property on here. I bought the minimal investment. I think you could buy it for like 300 bucks was the smallest investment you could make. It's this 33 mine property. I mentioned in the past that based on the quarterly report I had, it looked like they're distributing more money than they're making, and that was worrisome. And they send out this report each month, and you can see, okay, net operating income, distribution, rental revenue, what they sent out to investors um, for each of the properties. So I get to see each one. So it doesn't look like that for my monthly one right now. It was hard when I looked at last month's and tried to compare it to my quarterly report. It didn't seem to line up very well numbers wise, like as being one third of a quarter. But I want to show you something that I think is a little bit worrisome to me. And this is what I was thinking might be happening with mine. Um, if you look at Buttonwood and they have two of these, they're two different entities, but it's really one property that's attached, but they're run as two different properties. Both of these have a net operating income number smaller than their distribution number. Uh, that's worrisome to me because, obviously that means they're paying out of reserve, which is what I had thought might have been happening with my property. If it's a reserve that's being built up through operations, so like some months you're doing better, other months you're doing worse, and you're just kind of smoothing your revenue, I'm okay with that. Like that, yeah, I don't love it, but I'm okay with it. Um, what I'm worried about is when they did the initial offerings for all these, and a lot of them, those offerings are still going on, they're raising X amount of dollars for the property, but then also raising a significant reserve for each one of these. And if they're just paying revenue out of the reserve that they raised, that's just really problematic for me, right? Because that means in the long run, unless the NOI improves, they'll eventually run out, right? And so, they're giving themselves some runway, basically smoothing returns over the holding period, right? Like paying out some now and then later on hoping to do better. Um, that's just, it's a risky strategy that I don't love. So, one of the things is I'd really like, we get this is the extent of the information I get on a monthly basis. And then quarterly, I get something that is really not a whole lot more info than this. I'd really love to see on a monthly basis actual, full P&L, and also like to see like what's my reserve balance. I know like in their SEC filings, they must at some point, file their cash on hands amounts, but like on a monthly basis, I'd love to know how much we have in a reserve, right? Like, is paying out these excess distributions, is this depleting our reserve, or is it like, okay, last month wasn't as bad, and this month, like Or are we just like smoothing it across months, or on average over the year, are we paying out more than we're making? Because that would be a worrisome scenario for me. If you look at, like, I'm looking at one of these Buttonwood properties, they used to actually give you monthly reports. If you click on these, though, they're all reports from, back in 2023. I couldn't find, none of these are giving you monthly reports that are current. Um, that's worrisome. Why would they stop, right? Like, so you went from having more transparency to less. I don't like that at all. I always want more transparency. And like the quarterly report that I get for the one that I own, it's not extremely detailed. Why I can't get a monthly report? It doesn't. It's beyond me. Like why you can't do that, but it doesn't have any information about where my reserves actually are, like how much is in it. Um, it's really important to me. Like, do I want to buy more of that property? And I know, like, we've just been depleting reserves and we haven't ever accumulated. Like, I just don't understand why they wouldn't do that, right? Unless it is that they're doing poorly, and the only reason they're able to pay the yields that they are is that, that's just speculation on my part. But it is that they're depleting the reserve from when they raised it. I've seen syndicators do this in the past. There are some really well known, probably the most well known syndicator out there, is notorious for doing this, right? Raises a bunch of extra money, just starts paying that out right away. Says, "Oh, look, you always get a 6% yield from me," and you know, uh, getting your own money back is not a yield, right? Like if it's not really, and the problem is once you get to the end of the process, okay, you got paid out. Um, and I ended up, after we sold the property, we got less than we put in originally, because my original investment was the property plus a huge reserve. And so I don't ever want the reserve to be the source of my income, right? It's safety for the property. It needs to be there. Excuse me. But I don't want it to be the only reason that I'm getting reserves. If it's, I mean, like getting a return, I think that's a problem. Yeah, you can tell I'm super tired. I actually recorded this whole thing, and I don't know, my computer like crashed at the very end of it, and it didn't. Usually, when that happens, I'll just have to record like a little piece at the end, but it just didn't. It just lost the whole thing for some reason. So yeah, this is actually take two for me. I don't usually do multiple takes. I'm sure you can tell by how low quality these videos are. But anyway, that I just want to share that about, about what they're doing. They are paying out every single, on all their properties. They all have a return. They all seem to be, what they promised. But, I just find that worrisome, so I want to mention it. Next thing I mentioned, I want to talk a little bit about Real Bricks. If you've been watching the channel for a while, you probably saw me mention this platform before, but not very often. So this is what I think of as an Arrived Homes clone. They're doing basically the same model, although I think yeah, they're only in Omaha, I think, as far as I know. Um, they are, they're even using the same broker dealer, I think. I think they're using this Dalmore company. It's funny they named one of their properties that. But I think they even use the same broker dealer. Uh, it's tough for me to understand what's different about them, although they are showing a higher estimated dividend yield. I find this really interesting. So when I did my very first video on them, they were showing 9% on all their properties, and I just did some like really guerrilla math and was like, oh, that doesn't seem like it makes sense at all. Somebody from their company reached out to me and said, hey, you're right about that. They actually changed the website like the next day or a couple of days later, and then also invited me to, like, have a discussion with them. I responded. I never heard back from them. Well, it turns out my response went to the wrong mailbox or something, and hopefully I'm going to schedule a call with them sometime next week. And so I want to know, one, is anybody interested in this platform at all? If you are, feel free, let me know in the Discord or in the comments to this video. Um, Two, if you are, what questions do you have for them? Like, one, I'm curious if anybody actually bought one on here. Any of these, or you invested on this platform. What questions do you have for them? Even though, it is, basically it just looks like exactly the arrived homes model. I think there's room in the market for someone using their model, but bringing good deals to the platform. I'm not sure that's what's happening here. But like, for example, if you had a team that was as good at picking deals as the Mogul guys, the guys at, at Mogul Club, and they just wanted to copy the Arrived Homes business model where they're creating actual securities that they're selling, um, filing with the SEC, doing all that compliance stuff, I think their deals are so good on average that they could do that, handle the compliance cost, and still, and put out deals that I would probably still buy a piece of. Um, they've gone a different model where I think that they have their costs down a little lower, which reminds me, first of all, please like and subscribe. Hit the bell and yeah, tickle the like button, all that stuff. But in the description to this video, there's a link to all of the sites that I currently invest on, Mogul being one of them. Do your own due diligence on any one of those platforms if you decide to click onto those and any of the properties in there. Just because I buy a property doesn't mean it's the right move for you. You can tell, I make mistakes all the time. I'm going to tell you about a correction on this Lofty property in a few minutes. Um, so make sure you're digging into everything on your own. You're not just taking my word for it. I'm trying to share some of the insights I have, the way I think about this stuff, what I'm doing, how it's working out. But you really should just be always doing your own due diligence on those. Also, in the description to this video, there's a link to the Discord I have set up. Did I just say that already? Anyway, if you join that, there's about 120, 130 of us in there now. There's a lot of real good discussions. There's some ridiculousness that goes on in there too. We have some immature people that, that happens, I think, everywhere on the internet. But overall, we have a lot of good discussions about a bunch of different platforms. We're share some strategies, share some tips. Um, so yeah, feel free to jump in and do that. And so yeah, if you're interested in this platform, if you have specific questions you'd like me to ask when I'm talking to them, feel free to either put them as in the description to this video, or in the Discord, or DM me. However you want to do it. But yeah, I think that I definitely have a lot of questions surrounding, like, okay, why is every single estimated dividend exactly the same? The numbers are, like that makes me a little bit worried, right? Uh, as far as like info is, all my usual questions. I want more transparency. I want more numbers. I want all the due diligence, like all that stuff. But if there are specific things, I am super curious how they pick that market. Who knows? I'm really, that's one of the ones because I think every single one of them is in that Omaha. Maybe not. I don't want to move it because I don't want my screen recorder to give me a problem again. I'm just leaving these where they are. Anyway, that's about it for Real Bricks. I'm going to talk a little bit about this Rucker Ave property. This is the one on, it's the dog park. I did a couple videos about it already, but one of them I had some info wrong, and so I wanted to share that. So, um, one thing that's interesting is he has some cheaper tokens out there already. It's not selling very well so far. I think a lot of it has to do with the presentation, but also I think a lot of people maybe just don't like the deal itself. Maybe at a 10% discount, it starts to make more sense. But you've got to remember, with lofty fees, and the 5% premium that it was brought to the platform on, is this really a discount? That's something I'm not super sure about. But it's a discount to what it was originally priced at, and so, maybe it makes more sense for some people. But so what was I wrong about? I talked about the lease, right? It's the lease the dog park operator. And there's this lease guarantee. And I had just assumed, and I very wrongly so, that this person was the guarantor. I just was being sloppy, and I apologize for that. I should, I try to really, there was a lot. I mean, this was one of my longest videos yet, I think. And I really rushed to get ready for it. And because I had taken the weekend off. But this is why, like I said, you should always do your own due diligence. If you notice me making stupid mistakes in these videos, please let me know, because I'll always do a correction. If you're a co-owner, one of the people that brings a property to the platform, let me know. Or if you're a platform, you work at one of these platforms, I'm very happy to admit when I'm wrong. I always want to correct it. I'll put a pinned comment if you think it makes sense. Whatever it is, maybe do a follow-up video, whatever it is to make sure that we get the info right, right? So no, the guarantor in this case is the tenant, which is like, this is just very, very silly setup. And this is, I think, part of what really threw me off about it. So typically in commercial real estate, if you have a lease and then you have a lease guarantee, usually the guarantee is signed by somebody other than the tenant, right? Because the tenant's already signing the lease. So the guarantee you can kind of think of as often as like a co-signer, right? It's that same sort of thing. And so when it's a startup like this, I expect it, and this is what I had just assumed and just sort of glossed over. I expect it to be um, the owner of the entity of the startup, and so that's why I was like, oh well, we should ask these questions about that person. Well, he's like, well, no, that person didn't guarantee the lease. It's a corporate guarantee. Well, I mean, it's not untrue, right? It's the LLC, it's the tenant guaranteeing the lease. But again, when I hear corporate guarantee, that's usually indicates something very specific. It's when you have a subsidiary that is leasing a property. A lot of times, if you have a corporate guarantee, that means, or you assume it's going to be the parent company signing, guaranteeing the lease of the subsidiary, right? But that's not what we have here. We actually just have the startup company that's the tenant signing a separate document that's a guarantee. Well, that's just a weird setup. I mean, all they're really doing is trying to add some additional remedies and and guarantee obligations. Um, but like, so even if you read it, like, okay, they're guaranteeing the performance of the tenant on the rent charges. Well, okay, that's already when you sign the lease, what you did. So I mean, it's really just a strange setup to have this where you have a guarantee being signed by this possum park. Sorry, I just froze there. This is going to be the night that gets me to get a new screen recorder, I think. I haven't ever had as many problems as I've had today. I was actually just scrolling to see if the same tenant was, if the same person, if it's the tenant and the guarantor, and it is. So it's very strange. The language of it is even like, okay, both are executing it together. Well, no, it's just the same party. So anyway, I'm sure that's what threw me off about it, but it is. It was wrong, and so I wanted to make sure that's clear. And so it means we have a lot less protection, right? There's not some if the tenant fails, there's not some other entity that we can go after. Now, more info that I found out, and this, you can read the Discord and for to get the full details of this. But Chris, the co-owner, he actually recruited this, recruited the person that's coming to operate this, and basically funded the operation. So I think he said somewhere around 200,000. He lent to them to get the whole thing going, and he has, a note where he's getting paid back a percent of the, of the income from the operation. Um, I'd really would have liked for him to have led with that info, right? Like, if you have a financial interest in the tenant, in the building you're trying to sell me, and the value is really in the lease, I want to know that, right? Like, I, I really believe that he just maybe thought it was not that important. Because, as soon as somebody asked about him, he's like, oh, yep, let me tell you all the details. And he shared it. This is again why, both of these things I think would have been helpful if we had that entity org chart I was talking about. Usually I'd have, okay, who all the different entities are, right? Because we had pointed out that he signed it as a certain company, yeah, this Christo Management LLC, but the actual landlord entity was some other LLC. Um, it would have really made it quick to realize, oh, there is no guarantor because we wouldn't have a separate guarantor line item, or it would just have been the same name, right? So that's why I really like to have that sort of entity flow chart that just shows like, okay, who each party is in something like this. Um, anyway, that's that was something I talked about in that video, and I think when you're looking at commercial properties with multiple entities, especially if you have names that are similar or common ownership, it's really important to understand all the moving parts, right? And so, okay, big thing that I misunderstood is I thought there was an individual guarantor and there's not. One thing that just wasn't shown anywhere is that he has a financial interest in the tenant in the form of a loan. One of the things that's interesting, the reason that came to light is because the tenant's, contact info was Chris's email. So somebody asked about that, and that's how this all came out. Um, I don't know that I'm terribly worried about that. I don't think it changes the situation too much that the entity owes him money because he has an interest in both getting paid there and getting paid the rent. But it's worrisome to me that the only guarantee that we have is from the entity. That's a startup. So we're 100% just betting on them being able to ramp up their business to the point where they can afford the higher rent. Um, I don't think we were given any kind of P&Ls from their operations so far, and they're not operating in the whole building, so I don't know how useful it would be. Excuse me. Um, what one of the things that Chris mentioned was that, well, uh if they default, he has the right to take over, and then he could take over the tenant, and then he would have to pay rent, or try, he's like, oh, maybe I would just try to work something out with you guys, but me as a guarantor would be better than somebody else anyway. Which I think could be true. He seems like he's a successful guy. He definitely owns multiple properties that we're aware of. um, One of the things that I worry a little that goes on is, when he's like, oh, well, I don't know if you don't like this business model, but I've already bet close to $1 million on it. And if we think about, okay, we looked up what he bought the building for, and it looked like it was just under 800,000. That's when we looked in the public records. And so now we also know, okay, maybe he loaned somewhere around 200,000. You have to look in the Discord to see what that number was exactly that he said. Okay, that gets us to $1 million. So, okay, that's his all in on this property, um, which makes me wonder, there is like the $1.4 million in debt. Was that a cash out refinance, right? Did he take money out of this property at some time? And then he's in it for nothing? Or was there like, okay, he actually put in $1 million, and then also on top of that took out the loan? In either situation, at the $3.8 million valuation, um, if he sold half his equity, he's got all of his investment back, right? So yes, he made a big bet on this, and he's probably going to make money. But that doesn't mean that our bet is a smart bet if we, invest with him, because we're at such a higher valuation than what he bought in at, both uh, in the real estate, but also in, what that other money is money he's invested in the tenant, right? Um, so I don't know. One of the things that I think happens on Lofty quite a bit is you have these, new aspiring real estate investors. That's who is attracted to Lofty, and they sort of get enamored by some of these guys who are just very successful real estate investors and want to be in their deals. And I think this is another one of those situations where Chris might do extremely well, and we could still not do great, right? Like, because his basis is so different from ours, right? So we are his exit liquidity on this, and maybe we're going to do okay, right? But our outcome is completely tied to the success or failure of this one tenant. And so we're taking what I think of as very entrepreneurial risk here, right? It's all or nothing on the operation of the dog park in this building. Now, maybe this property, this particular operator doesn't work out and somebody else does it. He steps in or he finds another operator. But it really is just betting that that business model works in that location. And I'm not saying that he's wrong, but he could be right for his investment and it still not work out great for ours, right? And so on the surface, the amount of money that we're being offered as far as the yield, relative to the level of risk we're taking, it doesn't feel good to me. Which is why even at the discounted token price point, it's not enough to get me to buy into it. It doesn't mean that that's the right answer for everybody, right? But like, I'm always comparing, like, okay, what other options do I have in the marketplace? And for me, like, the real obvious answer is Mogul, right? Um, I just think that you could buy into one of their operating pad splits that's getting, 10, 11, 12% current yield, uh, and that the risk profile, it just strikes me as being so much different from what we're doing here, right? And maybe there's some additional upside here. Chris has sort of alluded to it, he's mentioned it, but I haven't, we haven't seen anything that's really made me think, oh yeah, that's why there's upside here, right? That's why we're actually going to make money on this deal, more so than just the 6% yield we're starting out at. And even like, okay, so the lease goes up to, we're going to double this basically in a few years. Um, Even on top, even that, okay, that gets us to about the return I'm getting on something that I think of as a much safer bet. Uh, and again, that's my assessment of that, right? Your job as an investor is to figure out, do you think the same thing, right? Is there something that you see here? Like, I don't mind getting a smaller yield if it's just as good of a risk adjusted return, right? If we were getting a 6% return on a McDonald's, right? I'm okay with that because that is, traditionally one of the safer tenants on the corporate side. It's really hard to find a six cap McDonald's out there. Normally, it's going to be, 4.5, 5.5, maybe get to six. I mean, it's going to depend on the location, the age of the product, all these different things. But a lot of those sell for extremely low cap rates. Well, because it's a tenant that's just very well proven. They've pumped out cash and paid rent for a very long time now. They have, depending on who your guarantee comes from, usually you've got deeper pockets. There's somebody other than just the franchise itself. It's usually some other guarantor too. So anyway, all those things, yes, there's certain times where I would take a much lower yield to invest in a commercial property, but it's because I would want a more stable and certain return, right? And so anyway, that's all I've got to say about that. Really just wanted to correct the one thing and then share the little bit of additional info. Chris has been really open to answer questions. I haven't loved all the responses that we've gotten, but he's clearly doing well for himself. Whether or not you're going to do equally as well jumping in on deals with him, I think it's yet to be seen, right? If it's, um, I, one of the things about the Lofty platform in general is it feels very much like it's attracting people that are just looking for exit liquidity on a deal that maybe they're not getting it from something else. Um, I mean, that's maybe that's the only real benefit of the platform for a seller, right? Like, I mean, obviously you want to get some, it's a way to take capital out of your property. But if it becomes the place where people just, really, um, I'd much rather have it be a place where we're all going along for the ride together and making money versus, okay, you've really like taken out most of the profit from the deal and now we're selling it to you, uh, with a very low yield, going forward. Now, if all the risk had been taken out of this deal, right, and I realize a lot of it has, it has been operating for a little while. Most of the build out seems to be done, although they're still waiting on permits and to finish everything, right? So it's unclear exactly, um, the current situation. But I think that all of that, they've de-risked it a little, but there's still a lot of risk. But we're not really. It doesn't feel like we're getting paid for that risk, especially because in the appraisal, they made the extraordinary assumption that we're closer to that $25,000 a month payment than we are, and also that the work was complete back on the August 1st. And the last thing about that in the Discord, I think it said that they don't have permits, so it's not complete yet. They aren't able to finish it. So we're already, paying based on an appraisal that's assuming things we know are not true. Uh, all these things together makes it hard for me to want to jump into this one, which is a real shame because I would like to see more commercial properties come to the platform. I think it is, interesting to be able to have, a different risk profile, a little bit of diversification. But I don't think it's something that we should be buying just because it's interesting, right? Just because it's quirky or fun. which leads me to Jerry's comments on X today, right? This really just kind of rubbed me the wrong way. Well, first of all, when he was like, he never imagined that somebody on the platform could be a landlord. I love that he spaced that out. To a USPS or to a McDonald's or to a doggy daycare. Well, I don't think that anybody is a landlord to a McDonald's just yet on the platform. Um, I thought that was kind of funny. Earl pointed it out too, but I had already caught that, and I just I I don't know. I don't want to pick on Jerry. I want like I would like to have a good working relationship with Lofty. I don't mean to just trash them all the time. I just I really want them to win, and I think to do it there's like I don't think it'll happen without a big mindset shift. And so this really rubbed me the wrong way. But he's like, okay, yeah, you have to look at the risk and whatnot, but I can't help but wonder if some of those users that sign up just to buy a single token might be doing it as cool and fun thing, treating a single token in a unique property as a collectible with some bragging rights, right? He's just saying, I wonder if that's happening, but I don't even like putting that idea out into the world. One, because I think he's right. I think there are some people that are like, I just want to own a piece of that post office. I just want to own a piece of the McDonald's. Me, I have always wanted to own some McDonald's, and I bet when I did the video on me investing in Leclerc originally, before I fully understood how Lofty worked and what that deal really was, because that's the one that is supposed to be buying a McDonald's but hasn't actually bought one. I'm sure I said like, oh, I want to get this one because I want a McDonald's, right? But I don't think that that is the message I want out in the world. I don't think we should be trying to attract more of those people. I don't think we should be highlighting these deals that are just quirky and fun and interesting if they're not great deals, right? And he's always like, well, I can't assess the deals at all. And I think that there is, to a certain extent, that feels like a cop out to me, because every platform, if you're a marketplace, you get to have some say over what gets listed for sale on your marketplace, right? I mean, I understand you don't want to be giving people investment advice, but you can have some minimum standards and criteria, um, for what can be listed on your platform and what sort. But anyway, um, I just don't even like him putting this idea out there, especially while sharing a property that's just a quirky property. It feels like I'm saying, hey, people of the internet, you could buy a piece of this one and it'd be like a fun thing to tell people you own a piece of, even though it's not how he said it, right? He's just saying, oh, I wonder if this happens. Um, but yeah, that just worries me. I would really like, I think the only way Lofty really succeeds in the long run is if they get serious about attracting both serious investors and serious operators that bring properties to the platform that are actually good investments, right? And there has to be a way that you can do that and still comply, where you're not giving financial advice, right? I mean, there's at least because right now the opposite is happening, right? Like the way it's set up, it's very clearly attracting bad deals, right? Like the where the average token price is so low relative to par value, relative to what it was brought to the platform for, or the price that was originally offered. Um, so where they're clearly doing things that lead to this adverse selection, that lead to bringing bad properties on the platform, they could be equally doing things that would attract good operators and better properties. Um, Still without mentioning, without giving financial advice, right? I mean, I think you could give some guardrails regarding like the type of reporting required, regarding, um, what an entity can own and what it can't own. Like you could set up like two lists on this platform. You must meet XY criteria for reporting and for have certain amount of historical performance that you're providing, right? Not and that would just rule this property out altogether. They couldn't list it right now because he doesn't have 3 years, for example, of financial data. Um, I mean, there's just all these ways that you could control what gets put on the platform, and then with just by uh, having set rules that aren't necessarily financial metrics, but are about um, what can be owned. Basically, is just saying what can be sold on your platform. Oh, each DAO can only have one property in cash or cash equivalents and FF&E. Like if you limited it to that, you're not telling them how to do business. You're saying who's allowed, what's allowed to be listed on your platform. And then in addition to that, if you said, well, I need 3 years of financial statements for the property, well, okay, now we're not going to just be tricked by these properties that have 1 month of good performance and list that as if that is the yield for the property. There's I mean, these are like simple guardrails that you could put up like that would make it so, okay, now I'm not telling people what to invest in, but it would be very obvious for the users what they should invest in, right? And I think by doing those things, um, yeah, you could just you could just you might not get the type of the quality of deal that Mogul is getting because obviously they're going out and intentionally finding good deals. But I think that I think the average deal could be significantly better just by doing that, right? Because then you'd have some market forces on the platform where they'd actually be able to figure out what's going on with the property. They wouldn't have any convoluted setups. You could require the level of disclosure, like I mean the fact that we could have a questionnaire of things that have to be disclosed before listing on the platform. And obviously one would be like, do you have a financial interest in any of the tenants, right? Like I mean, stuff like that. uh Again, I don't see how that would cause it to be more of a security versus like you're just getting, you're just these are the requirements to list on here, right? Not and it's not you have to have be X cap rate or something like that. Like it's because if we had the information, then the market could just pick based on cap rates. And so then, properties that got listed that didn't do very well. And honestly, I'm really proud of the Lofty investors for not just crushing, not just like piling into this one without all the info. Like maybe this is a deal somebody wants to get into, but clearly we haven't been given all the info that we need to make a good decision. And so it's fantastic. Like I think it's great that it hasn't sold out very quickly. Um, Obviously I want to see him win too, because I just want this industry to do well, but I don't want it to be too easy for sellers to raise money for a bad deal or for a deal where there's just not full transparency. Um, but yeah, I mean, there's been very few sales in this one relative to, Alec had a property that he put up that's just a single family home. Honestly, I didn't love that deal either. If you watch my video, but I really like him as an operator, and I think that like if you're buying it because you're betting on him versus the actual fundamentals of the property, I don't think it's not something I'd ever recommend, but I don't necessarily think it's a terrible decision. But he's blasting out equity. I think last I checked, he sold like $23,000 worth, where this is like a big commercial property worth millions of dollars. And last time I checked it wasn't anywhere near that. Um, it shows that people are being a little, doing a little bit more due diligence, but also maybe there's a little bit too much of a halo effect around some of the operators to where like, okay, somebody's buying into their stuff without even really paying attention to the fundamentals of the deal. I don't know. Anyway, um, I really don't mean to pick on Jerry. I would like us to be friends. We haven't really talked much at all in real life. I think one time in the lounge we've exchanged emails and whatnot, so I don't know him. We interact online and stuff. I want to see Lofty win, right? But I think that I just think this is the opposite of the type of attention that we want for the like I'm sure this brings new users, and I'm sure somebody. Oh, and so one of the things he mentioned, he's like, I can't help but wonder if some of those people that sign up and buy just a single token, and it made me wonder, like, okay, are there a lot of these people? Because he's made a comment similar to that in the past. And so I remember that. And so I asked my quant, okay, I've got a quant. I don't really, but I got this from a reliable source who likes to dig into wallets regularly. And from all the wallets he checked, it looks like about 5%, maybe, 5.5, somewhere around there percent of the Lofty wallets only hold a single token. So it is, I mean, that's a meaningful number. I actually was thinking it might even be bigger than that, but it is like, okay, one out of every 20 people that buy a token never buy a second token. A second token, right? Like, that's crazy to me. And I think, I think maybe some of those people are the people like me who I bought a token just so I could get into the Discord and start to look around and do some due diligence. And I bet there's a lot of people that do that, see the circus going on, and say, you know what, I'm out of here. So I don't know if you remember, I was looking at the Lofty Assist data on, new wallet creation, and like a very small portion or a small percent of the new wallets actually fund. And so then of those ones that fund, 5% of those are only ever buying a single token. I'd really be curious about how many people would just make a single order, right? Like, because I know well, I bought a token using the gift certificate, whatever. But like my first purchase, I probably bought, I don't know if it was 500 or $1,000 worth of a property, something like that. So like all of those people, if they made a purchase like that and then never bought anything else, they don't even show up in that number, right? That's just the number of people who literally just have one token. Um, I think that's a bad sign, right? Like that's a lot of people to just get one thing and never do it again. And some of those people might be trying to test the waters. I think that's probably not giving a very fair shake to the platform because, um, if you just happen to pick a bad property, but on average, you're going to pick a bad property a lot of the time if you're buying a $50 token on there. So I don't know. I just thought that comment made me really want to start looking at that data more often. Um, because it's a weird thing to do, right? To sign up for a new platform just to make one $50 investment and never buy anything again. Maybe they are doing what he's saying. I really like if that's you, if you're buying stuff just because it's cool, well, I mean, I guess that's okay, but like that's not a way to make investments, right? And so I think if the goal is for all of us to make money, which is what I think our goal should be in fractional real estate investing, and so I would love it if that was the main focus of the platform because they're providing a service. The service should be to help, like to connect us with deals that we're actually going to make money on, not just, okay, well, we're listing whatever's legal. Anyway, that is my rant. I continually do. I'm going to be done with that for today. Um, Hopefully I've corrected all my recent mistakes now and I don't have any outstanding. Please do if you're a platform owner, if you're a co-owner in some of these properties, or if you just happen to notice that I'm making some stupid mistake, let me know. I'm happy to fix it. I always want to correct it. Just hoping to put out good info, so we can all buy good deals, make a bunch of money. Um, yeah, hit the little bell and tickle the like button. And until next time, I am going to just keep making mistakes so that you don't have to.